I'm the global market analyst here at Markets.com, and today is Wednesday. Ladies and gentlemen, today's the Fed. Today's the Fed day. Today is the Fed decision day. Look, we're going to have the interest rates from the Federal Reserve, and of course, the most important is going to be the press conference after that. But look, about all this and a little bit more in my webinar right now, so stick around. Do not tune out. Hopefully, you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello. This is me, Darius Anucauskas from Markets.com, and today is the 7th of May, 2025. So yes, ladies and gentlemen, welcome to this Wednesday's morning session where we're going to have a look at the markets, a few of the charts, the usual stuff. Basically, we're going to pick up on what's happening today, and there is a little bit of a few things happening today. So yeah, look. Before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yep. Oh, by the way, I need to also, as always, say good morning in the chat room, ladies and gentlemen. Good morning, everyone. I hope everybody's having a wonderful start of Wednesday. Look, also just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, ladies and gentlemen, let's have a look what's happening with the markets right now. So Nikkei 225. So in terms of economic data, are we getting something here? Well, we got the Jibun Bank composite and services PMIs that came out. So look, came out better. That's a good thing. However, the market is on pause right now. It's not really reacting to the good news, in my opinion, because it is waiting for the Federal Reserve, which I'll talk in a bit about. Do apologize for the noise, and if you hear any additional external noise. Basically, we're in the office, and we still have a bit of we're in the new office, and we still have a bit of construction happening. So hey, hopefully it will all be good. So yes, Nikkei 225 here. We are stuck at the moment, but we're stuck in a positive way, I would say, because we remain above this downside line here, and it's acting as a good area of support for now. But in a way, if you're looking for some higher levels, then I would say wait for a pop above the 37,269 zone right there. And additionally, a push above the 200-day EMA could help out a lot. And then we could, like I said, get a little bit more excited with the upside. But look, for now, I think that there's not going to be much action. I think that everybody's going to be just waiting for the news. We'll be waiting for the Federal Reserve interest rate decision. But and I think that, like I said, once we see some movement in the U.S. indices, Nikkei 225 cash index here could follow suit. So let's keep an eye on it in terms of economic data, upcoming economic data from Japan. Look, tomorrow we have the BOJ monetary policy meeting minutes. Last week we had the interest rate decision where the rate kind of remained the same. So in a way, we're just gonna read the same thing what was mentioned in last week's meeting. So again, I don't know. It's up to you. If you follow this, okay, great. Look, in general, we could see a bit of market reaction potentially. But then the question is it going to be the market reaction to this, or actually just the market reaction to the Federal Reserve? Friday, we get the household spending. Now, that's something that we could see some market reaction in Japanese yen. So keep your eyes on that one. At the moment, the expectation is for an improvement on the year-on-year figure, but a decline on a month-on-month number. So let's see which way this is going to come out. If we manage to basically beat forecasts, then great. Maybe this could strengthen the Nikkei here a little bit more, and we could see some action to the upside. Now let's jump into China. Now we're looking at China's open again, and we're seeing some positivity. I mean, the positivity is coming from where. I mean, there are talks right now. We're seeing some some positivity in the U.S.-China relations, and this is where the market is kind of enjoying the moment, and we're seeing China 50 kind of pushing nicely to the upside. Certainly from the technical perspective, we are seeing that we did clear this 13,288 zone, which was the high of, let me just double check very quickly. There was the high of the 25th of April, basically the high of last week, oh, sorry, no, not last week, the week before that. It was the high of the week before that, and we cleared it, but we failed to remain above it. Well, the night is young, and so are we. So basically, it might not really actually, stay here. If this positivity continues to hit the headlines, that more that the talks are progressing and stuff like that. So it's interesting how the White House kind of twisted everything, that it's now on China. It's like China is if China does not agree on deals, then it's up to kind of, it's their fault in a way that the stock market is falling. I mean, honestly. Anyway, so what we're seeing here is right now is that at the moment I am keeping an eye on this 13,288 zone. If that gets cleared, then yes, and we see the body of the daily candle staying above this area, I'm going to go further north. US 30, which is the Dow Jones Industrial Average. So look at this action. Yesterday we saw a bit of a decline. Today we kind of gapped here to the upside, and well, I mean, for me this looks very interesting. It looks more, if this candle is going to stay like this, maybe this is going to end up being like a bullish harami, hey, let's see if that's going to be the case. But again, to be honest, at this point, probably my better option here is just to wait for a push above the 41,450 zone right there, which is the high of or the current highest point of May. And then we could consider some higher levels. So just to be a little bit more on the safe side, yes, I think that this is where, from where we could start looking at some higher levels. But again, even then, we have a little bit of a problem with the EMAs here, the 100 and the 200, shown as the blue and white lines respectively. So if we can clear those as well, great, wonderful, more buyers could join in. In terms of the downside, if you are a bear, well, to be honest, I think at this point the better option is to wait for a break of this little upside line, which is drawn from the low of the 7th of April. Look, the drop below the 40,657.50 zone somewhere here might not really do the trick. I think that we would have to just wait for a break of this upside line instead. Now, let's jump into the S&P 500. Now, the S&P 500 here is also somewhat positive. However, I think that we're waiting for the Fed, and I think that if that one, it really ends up being positive for the stock market, then great. I'll talk about the Fed in a bit, but here from the technical perspective, look, I would prefer actually to wait for a push above the 100-day EMA in order to go higher. NASDAQ, very quickly, similar story. Well, almost similar story, I would say, but for NASDAQ, I would prefer to wait for a push above the maybe 20,180 zone somewhere here. That's the current highest point of May. The arrow needs to be like this. So, long story short, all eyes are on the Fed. And speaking of the Fed, so as we know, the interest rate decision is expected to be in the same. There's no forecast for a higher or a lower number, and the same. This is what we can see on the Fed Watch tool as well. So the higher probability for having a no cut or keeping the rates as the same is very high. It's almost like 97%. Well, look, in my opinion, this is what the Federal Reserve will stick to, for sure, okay, nothing is for sure in general, but this is what I think. I mean, everybody understands this, but I think that it's mainly now like a principle involved. Maybe, let's say, in some sort of universe where the Fed maybe could have thought about cutting rates during May meeting. Now they're just not going to do it out of principle, because it would mean that they kind of obeyed the White House. So And if the market kind of when we saw attacks on Jerome Powell from Trump, and we saw those verbal attacks, and the market kind of stood with Jerome Powell, and it was very interesting to watch. So that's what I'm saying. So if right now, if let's say Jerome Powell would go for a rate cut, then it would show that maybe it's in a way, in general, a rate cut is a good thing. It should support the stock market, but something tells me that the stock market could actually take it as an offense, and it could sell off. So that's where my thought is. I mean, again, maybe you agree or not. Look, you can always leave a comment or just drop me a message in there in the chat, in the live chat. What do you think about this? But that's from my perspective. And at the moment, I think that the what's more interesting actually is going to be the press conference. Now, the interest rate decision itself, fine, that's absolutely okay. But what's more interesting is going to be is the press conference and how they will communicate the next possible rate cut. Now, is it going to be in June, or is it going to be a little bit further away? Now, we know that by the end of this year, we're expecting at least 3 cuts. Okay, will that happen? I don't know. Like, again, with the moment, looking at the United States inflation, it's kind of around 2.4%, so it has been drifting lower very quickly. But I think that the Fed is not really, it doesn't really want to go for those crazy cuts yet, because they understand that, look, I think the economy could catch up. I mean, the inflation could catch up because, again, a lot of tariffs have been imposed, a lot of uncertainty, and this is where we started seeing reports that in the U.S. Ports, ship ports, or maritime ports, have been handling less goods, less traffic. So, and this kind of gives this indication that maybe people are getting a little bit on the cautious side. So that means we could be limiting supply. Now, demand is still around the same area, but if supply drops, then, well, you could see inflation spiking back up again. And next week, we do have inflation numbers from the US, so we'll keep those in mind. Let me just very quickly double check that. What was the forecast? I mean, I forgot already. I think it's going to be coming out on Tuesday. Yes, Tuesday. There we go. So the core, we don't have the forecast here. Is that true? Let me just refresh the page. Right, we don't have the forecast. Okay, let me just double check another source here. So, okay, right. The forecast is for a slightly higher number. So from 2.4 to 2.6 in a way. So, okay, let's see. Again, that's another source rough estimate. So let's see if that's going to be the case. If inflation does pick up, so you're not really considering any cuts, and that's why, like I said, that's why the Fed is not really going for a cut right now, because there is this belief that inflation will pick up again, and in that case, you cannot really go with the rate cuts. And on the contrary, they will have to say that we're dropping our projection for rate cuts by the end of this year from 3 to maybe even 1. Of course, it's not going to sparkle very well with the White House, but the market needs help, and the Fed is the one. The Fed is the one that is looked at in order to get the market help. So like I said, if suddenly the Fed surrenders to the White House, then it becomes like we could see maybe a little bit of a decline in the stock market, because we already saw that, and in the beginning of April, and it wasn't pretty. So there was a little bit of panic here. Look, in general, judging from this, after we hit all-time highs, and then when we hit this lowest point in April, right now we did retrace already the 61.8 here, and look, in a way, we can say that maybe that's enough. Maybe that now it's time for a little bit of a retracement. Well, I'm not going to argue with you here. There could be a bit of retracement. We don't know if it's going to go from here or not. But at the moment, I would say this way, as if these EMAs here on the daily chart on Nasdaq, sorry, not Dow Jones, in Nasdaq here, if these EMAs are going to hold, if we are struggling to, if we will struggle to push above those, well, I mean, this of course gives us a bit of a negative outlook here, and we could see a nice little retracement back down. Let's see. Again, this is something to keep in mind, something to consider. But what can I say? For now, this is the situation, and in this situation, we are waiting for the Federal Reserve interest rate decision, which is coming out today. So let's keep an eye on that one. Again, like I said, a lot of things to consider. Like I said, we will get the interest rate or no action in the interest rate. But the press conference is going to be quite interesting, because if they're going to suddenly say that, you know what, they're actually willing to go in for some cuts, and they're willing to act sooner rather than later, then that could actually spark some positivity in a way, because again, this would mean that you know, their position, their stance for the 18th of June interest rate decision here could shift a little bit more towards this one cut. So again, that's something to consider. That's something to keep in mind. Jumping into the US dollar, and that could of course be a little bit of a negative thing for the US dollar if they do decide to go for a cut earlier, let's say in June. That could be, like I said, that could be something of a bearish thing for the US dollar. From the technical perspective, I would wait for a drop below the 98.65 territory right here, and then maybe do something about it. Let's jump into one of my favorite ones, and this is just crazy. Okay, so what do we have here ourselves? Now we have a fantastic V-shaped recovery. I mean, look at this. We're just fractionally away from hitting a new all-time high. Honestly, this is just wow. We have recovered everything what we dropped in the beginning of April, and it's just, yeah, I mean, it's now, the question is like, when are we going to hit the all-time high? Okay, some of you might say, hey, Darius, but what about this candle right here? Is it a possible reversal candle? Well, it could be. We have ourselves like a hammer here, but maybe this could be, like I said, it could be seen as a continuation pattern. So let's keep an eye on this one. Let's not rush into things. For now, I would just, when you get unclarity, and nothing is clear like this, then you know what, at this point I will get a little bit more excited if I get a push above the current all-time high, which is roughly around the 23,470, 75, 76 zone right there. If we can clear that, I'll go to the upside. For the downside, I would prefer, well, I would start looking at some lower levels if we do fall back below the 23,200 territory. If we do that, then my next target is the 22,820, and so on and so on. Now, let's jump into the FTSE 100. Now, the FTSE is also doing quite well. Look, let's not forget, it's not only about the Fed this week. It's also about the BOE. So in their interest rate decision, where we are expecting a cut of 25 basis points. Now, what's going to be interesting to see, the BOE vote cut, and the forecast that there is going to be 9 people in favor of the cut. Again, we're going to be very carefully watching the other, where the people are going to be like unchanged. So in previous session, there were 8 people who were for unchanged and 1 person for a cut. Now the forecast is that 9 people are going to be for a cut. So, but if this shifts towards, let's say, having not 9 people for all nine members of the MPC committee voting for a cut, but let's say only a little bit less, let's say 7, and then there's like 2 people unchanged, then this could actually not be that positive maybe for the FTSE, because again, this would kind of raise concerns that maybe the BOE would be just kind of slowing down in terms of future possible rate cuts. So that said, let's keep an eye on this one. For now, we're dealing with the Fed. We're going to be dealing with the reaction in the Fed. and then we'll go from there. Tomorrow is a new day, but let's focus on today. Let's jump into the Forex world very quickly. AUDUSD, let's have a look what's happening here. So I have thrown out this idea on AUDUSD for recently, and I can't remember now. Was it like on here? Was it on TradingView or was it on YouTube? Basically, I talked about this. These scenarios. Where is that? Let me just say. I think maybe it could have been. No, it's not this one. It's not really this one. Right. You know what? I think it could have been on. Could have been on YouTube. Let's have a look. Let's have a look, ladies and gentlemen. So, okay. Anyway, I think it was one of the videos here where I covered. Honestly, like this is something that I was talking about, and I can't remember now which webinar, which video was it. But anyway, look, it doesn't matter. The most important thing was that I was talking about this breakout here, and I said, look, if we stay above the 0.6450 territory, there is a good chance for this one to move higher. Of course, we had a few violations here, but look at this. We just created tails. The body of the daily candle remained above this hurdle, and in a way, this is kind of opening the door to some higher areas now. So my next target, in a way, is this 0.6536 or 50 actually. But look, for that you need to see the US dollar weakening in a way. So maybe like I said, the cuts of the interest rate cuts. Potential interest rate cuts, if Jerome Powell says something like that, could weaken the US dollar, and we could see AUDUSD traveling further north. Now, don't get me wrong, I'm not really getting way too bullish, because at some point we will have to correct lower, but just that not now. And it seems like, yeah, it doesn't want to go. It doesn't want to go lower yet. For me, the downside scenario. Now, at this point, I think what I'm going to do is I'm going to wait for a drop below the 0.6450. If we can fall below this hurdle, then yes, great. I'll consider a move lower. AUDJPY. So the pair that I talked about now for this one, for sure, this is where I mentioned this, and I said to you, look, keep your eyes on this. Keep your eyes on this position where we are right now, because we are near this key area of resistance, near this downside line, yes. So if we can clear this, great, I will go higher. And let's not forget that AUDJPY is our risk on, risk off monitor. And if we do see some positivity in the stock market, then this pair could fly high as well. NZD/USD, just a quick update. So we're near key resistance. Okay, that's fine. So the Fibonacci worked out nicely here. The 23.6, like a charm. Perfect. So what I'm looking at here, I'm looking at the 0.6037, and if we can get that nice clearance, amazing, I will go to the upside. For the downside on this one, well, I think that the easier option is just to wait for a drop below the 0.5893 territory right there, marked near the low, or should I say actually the lowest point, the current lowest point of May. A drop below that may open the door to some lower areas. USDJPY. Now, okay, we're watching this one very carefully, and we're seeing some positivity kicking in right now. So, look, this is working out. This, in a way, worked out nicely. I talked about this little drop below the 144 zone. I said that if that gets cleared, my next target is somewhere around this 142. I wouldn't really reach that area that much. I mean, straight, like we reached the area a little bit above that. But hey, look, as long as we stay below the 144 territory, I'm going to continue targeting the downside. But if we somehow pop back above it, I'm going to consider a larger correction to the upside towards this downside line. US dollar against the Canadian dollar, and I love this one, and I'm loving the formation at the moment, because the formation is telling me that we are in a falling channel, which kind of indicates further downside. However, I said to you before that whenever we get a nice drop here, a nice like decline and then a gradual decline, these patterns tend to break to the upside. But we need a confirmation break. the break of the upper side of this falling channel. If we can get that, amazing, great. I'll consider a larger correction to the upside here. But at this point, the main scenario is still to the downside, and we're watching the Fed. USDCHF, we're stuck here, and most likely we will remain stuck, and we will continue watching the Fed. Look, if we do pop back above the 0.8332 territory right here, which has been acting as a good area of resistance, I would say that I'm going to consider a little bit of a move to the upside here, at least towards this upside line taken from the low of the 28th of December 2023. Let's jump into the euro very quickly. Look at this. We had a nice little rebound from this territory, this 1.1264 area zone here. Now, somebody might say, but hey, what about if we're forming something like a head and shoulders pattern? Yeah and no, because on one hand, yes, it could look something like that. It could look actually more like a complex head and shoulders, but to be honest, look, the safer option is still, if you're looking for some lower levels, wait for a break of this steep upside line, which is drawn from the low the 28th of February. If we can get that move, amazing, great. I will consider some lower levels here. But again, even then, the problem arises with this other downside line taken from the high of the 18th of July of 2023, which could provide a little bit of support. So basically, wait, let me just grab this one. Basically, something like this could happen. Something like this little curve could happen, and hey, you know, maybe, like I said, maybe this could play out nicely for the bulls later on, but at the moment we don't know, and we're watching the Fed, and let's see how this is going to play out. EUROJPY, now this one, I'm loving it. Now look, yesterday I was talking to one of my colleagues, and I was just explaining the situation here that this formation here looks like the so-called the bullish 3 method. It's when you have the first candle to the upside, a very strong one, and then the second, the third, and the fourth candles are smaller, they're to the downside, but the total of their bodies remain approximately within the body of the first candle. So this leads to us to the fifth candle, which could be, you know, to the upside, and so far it's doing a very nice, good job. It's pushing higher. Let's see if the Fed is going to be enough to drag this pair even further north. Of course, certainly the situation here, my preferred upside scenario is from around this 164.18 zone. If we can clear that, great. I'll go for some higher levels. But again, look, for now, I'm really carefully examining this little scenario. Let's see if this is going to play out nicely. EURUSD, so fantastic hold up near this 50-day EMA. Let's see if we can have enough steam to rebound and push higher. What I really want to do here is I want to see if this is going to make sense or not. But without drawing it, I won't be able to see it properly. So maybe, just maybe, we're getting ourselves a nice little falling wedge pattern. And if that's the case, then, well, this we could expect to pop higher at some point, right? Well, yes and no, because again, we're coming back to the same point that you need to wait for a confirmation break. Oh, sorry, something got into my eye here a little bit. So, look, for now, I'm not in a rush. Yes, on the positive side, we have a hold up near this 50-day EMA. If it continues to provide support, that's great. But if we fall below it, then that kind of opening the door to some lower areas. GBPUSD, also watching this one carefully, but look at this. This one's actually a little bit more promising. Let's remove everything. Basically, could be or not the head and shoulders pattern. If that's the case, then we could expect a nice little confirmation break, confirmation break, and a move lower at some point. Now, this would be quite interesting actually, and this is what I'm going to do. I'm going to take this conservative approach. I'm going to wait for a drop below this hurdle, below this 1.3251. If that gets cleared, my next target is the 50-day EMA, or maybe a little bit lower, because basically this upside line right here is something that I'm going to be watching very carefully, because if this is going to get cleared, this 1.3251, yes, it's opening the door to even maybe a larger correction to the downside. Who knows? Because this upside line nicely coincides right now with the 100-day EMA, because you can almost like not see it, and it's hidden behind this upside line. So this could be, like I said, a nice, good target. Let's jump into gold. Gold had a fantastic move. So in the beginning of this week, I talked about this and I said, look, we're possibly in a falling wedge pattern. And according to all the TIA rules, such patterns tend to break to the upside. Boom. Fantastic. Are we going for a new all-time high? Well, who knows in a way. At this point, nothing is for sure. One thing that I can see clearly, that this barrier, this 3,430, is providing fantastic resistance. So what it leads, this kind of leads me to the fact that if we want to go for some higher levels, then we need to wait for a clearance of that barrier. If we can get that clearance of this 3,430, then yep, my next target is the 3,500 or maybe higher. There are talks that, hey, because of this current market instability, is 4,000 a thing? Well, 4,000 is a thing for sure, because I'm not saying that we're going to for sure go there, no, but is this like a very crazy thought? No, it's not, because look, 3,000 was a crazy thought in a way for a while. Last year, we were, look at this, look at the evolution of this metal here, like back in March, or let's say the same time in 2024. So back in May, we were around 2,300. I mean, look at this, where we traveled. In general, look at this parabolic move to the upside. So I would say whatever goes up like this must come down eventually. And honestly, it's like, I'm not getting very bearish on gold or something like that. No, but we had moments where gold did decline, and we had moments where gold was feeling the heat. Let me just go back into history, and I need a bigger chart here. I need this trading views chart. So you can see here, for example, back in September 2011, the 1st of September here, this is a monthly chart, by the way. We reached an extraordinary 2,000, almost 2,000 level, and we saw a nice correction back down all the way back to here, where we almost hit the 1,000. So we from this peak, we almost slashed like 50% of this, from this value, from this 2,000. We kind of ended up being here. That was great. I'm not saying anything, but then we from here we rallied. This was back in 2015. So around 4 years it took us, right, to get here, and it was just declining. And well, I mean, look where we are right now. We're seeing a parabolic move. This cannot continue like this. At one point, this will correct. Now the question is when and how far and how big and how far we will fall. So let's put it this way. We could apply our Fibonacci levels on here, on this one. We can maybe do from here, which seems to be the most logical point right now, the lowest point of September of 2022, all the way up until the current highest point. But again, we don't know if this is going to be the end of the current highest point. So the 50% kind of retracement from here is the 2,500 zone-ish, and 2,550, so it looks quite logical in a way. Again, let's not rush into things. Let's see what's going to happen. If that's the case, wonderful, great. I will consider some lower areas here. I mean, but again, at this point, although it looks very attractive to go for a hike, for a sell. However, you need to wait for confirmation. So in here, last time back in 2011, we saw the monthly candle rallying above the previous high before kind of reversing back down. So look, this, like I said, I'm always a supporter of these moves, and we see a bigger move here, and we see a like for example, back here in 2020, we saw a nice rally, but then it kind of quickly faded away here, but first we cleared the high, the previous month's high. But then we closed the month below it. So that's what I'm keeping a close eye on. So we'll see, like I said, how this plays out. Again, I'm not, don't get me wrong, I do like gold and I do like gold to the upside, but again, I have to approach this from the kind of logical side. Silver. Silver looking interesting. Let's jump into a daily chart. So yes, we had a nice pop here. Okay, great. We remained above the 50-day EMA. So in a way now there is a chance for this one to continue drifting higher. However, I would like to see a break of this downside line first. If we can get this break, wonderful. I'll consider a move to the upside. For the downside, probably the better option is just not to stick to any level, but just keep your eyes on the 100-day EMA, which so far is acting as a good area of support. Let's jump into copper. Let's have a look at what's happening here. Look, oh, this looks a little bit bearish to me because this looks like a pole. This looks like a bearish flag. This looks like a quite bearish, but I have to say that I'm not going to do anything yet because first I'm going to keep an eye on the 50-day EMA. If that gets cleared, that's wonderful. Then I'm going to aim for the 100-day EMA, and if the 100-day EMA gets cleared, I'm going to aim for the 200-day EMA, period. For the upside, I'm going to take a very, very conservative approach here, and I'm going to wait for a pop above the 4.96 territory first before examining higher levels. Oil, of course. Oil, our beloved oil. Now look, initially this worked out like a charm because again I was talking about this technical setup. Again, a bearish flag worked great, and then this is where we found nice, good, strong support near the $55 mark. So this $55 mark remains for me the more important one if I'm looking at some lower levels. So if I can get this move, below this 55 dollar mark, then great. I'm going to go lower. At this point, I am just observing the price action because my upside scenario will be from around here somewhere, from around this $65 mark. But even then, look, we can start, if you're a little bit impatient, then you can keep an eye on this downside line right now, which we are approaching very quickly. Or you can keep an eye on this other downside line. So basically, we have a bunch of subjective lines which we can monitor, of course. But do we really want to focus on them too much? Well, let's not get too excited about this. For now, look, very simple. If you are on the more adventurous side, you can keep an eye on this downside line. If you can clear it, maybe we'll go back to the 50-day EMA. But if we struggle, hey, another decline here could be possible. Natural gas, we stalled a little bit, that's fine. I don't really have strong feelings at the moment for natural gas, apart from if it's going to start breaking the 3.74 territory. If it starts breaking the 3.74, amazing, I will consider some higher areas. For the downside, now for the downside, 3.295 is something that I'm watching here, and if we can get this nice clearance of this 3.295, then wonderful. I'm going to consider a bit of a move lower, but then of course we're carefully monitoring this little situation right monitoring this situation right there around the psychological 3 zone, because again, let's not forget that this could be this nice good target. So, right, now then, that's in terms of natural gas. My favorite coffee is holding on nicely above this 50-day EMA, but still my preference for the upside is from this 419, and you can see why. 411, and yeah, you can see why. Sugar, I'm loving sugar, and I'm loving where it is right now, so we're at a key important breakout zone, so if we can clear this, we can stay below this $17 mark, then I'm going to go lower. And my favorite cotton is pushing nicely to the upside. Look at this. I am watching this this 69 zone, 60, or actually the $70 mark. I think that could be the better option. If we can clear the $70 mark, we will be already above the 200-day EMA, and we could see more upside. So for now, let's keep an eye on this, and we'll go from there. And finally, for dessert, let's jump into the crypto world. So yes, Bitcoin is showing some love, and we are seeing some positivity coming in, which is great, which is fine. Look, I think that the positivity is coming from the China-US trade deal. So yeah, we're near key resistance right now. We're near the highest point of May, which is around just a little bit below that 98,000 zone. If we clear the 98,000, of course, the 100,000 is our next stop. So we're keeping an eye on that one. Bitcoin Cash also pushing back above the 200-day EMA. Let's see if the third time is a lucky one. I mean, we had a move here above the 200-day EMA. We stayed, but then the next day we dropped. Then on the 2nd of May we stayed, but then on the 3rd of May we dropped. Today is the 7th of May. Let's see if on the 8th of May we stay above that 200-day EMA. Then maybe that's our cue for looking at entering here from Bitcoin Cash. Well, again, this is still, it involves risk. I mean, because what we see, the other market participants see as well. So let's see what's going to happen here. Ethereum, of course, is also shifting back up, but for this one, I need to see a push above the 50-day EMA here, shown as the the green line, and then we'll go from there. For the downside, I would prefer to wait for now. At this point, I would prefer to wait for a drop below this upside line. Ripple, Ripple is, I'm loving this action. Look at this. This is just brewing for some sort of a breakout here, but I can say this way that I'm waiting for that clearance. I'm waiting for that breakout. If we can get that move above the 2.30 zone, amazing. That's my cue for the upside. Look, I talked about this a while ago. I threw out a little piece here on Ripple, and this one right here, where when we just approached this downside line, I said that I will wait for this one to get a nice clearance, and I also said that I'm watching this 2.30 zone very carefully. So, and look, it's becoming this, like I said, this is becoming this important barrier, this 2.30. So if we even break the downside line, we're still watching that 2.30 zone, and if that one can get cleared, amazing, more buyers could join in. Litecoin, beautiful. I love Litecoin. Honestly, it's really nice. It's really technical. Look at this. We're now, again, the question, can we stay above all the EMAs? If we can, amazing. I'll go for some higher areas. Dogecoin, somewhat, yes, looking somewhat positive, but again, a push above the 50-day EMA is needed. Polkadot, we're, flirting with that psychological 4 mark, but I would prefer to wait for a push above the 50-day EMA, shown here as the green line, and then we could go from there. So, ladies and gentlemen, thank you very much for watching and listening. I really, really appreciate your time, your views, your likes, your comments, everything. So, look, if you have any questions, you can always drop them in the live chat, but if you don't, or you, for example, you're watching this as a recorded session, then yeah, do not hesitate to leave a comment below the video, and I can pick it up in my next session. So thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I shall see you on Friday, the usual, 7 o'clock GMT time. But for now, have a beautiful trading day and watch the Fed. Bye bye.